Okay, now let's go to the preference share redemption fund, contingency fund, and insurance fund. So take note, preference share redemption fund is part of the non-current assets, okay, in the statement of financial position. So it's very simple here, yung accounting natin sa redemption fund. So it only involves two accounting consideration, the setting up of fund. Actually, itong tatlo, dalawang accounting consideration siya, no? Setting up of fund and redemption of the preference shares using the fund. Kung contingency fund, gumagamit na yung contingency and the insurance fund. Okay, so the journal entries involved in the above mentioned are provided for follow. Again, you need to separate, no, from your general cash. You separate it into fund, no, your preference share redemption fund. So this is the intention here is for your redemption of your preference funds. So you separate your cash there. Okay? And then if you redeem already your preference shares, so your entry, preference shares usually at par, and then your fund here, and then the difference would be on the retained earnings. So yung retained earnings natin. Okay. For contingency fund also, we have still two accounting. So the same gihapon siya. First is the establishment of the fund, and then when you pay the contingency. So for example, when you establish your fund, so the same gihapon niya, si contingency fund is part of the non-current asset. So contingency fund, debit and credit cash. And then kung daan na lawsuit, na lose, no? Meaning napildi on sa kaso. So lose on lawsuit, and then contingency fund, settlement of the lawsuit. Next, for insurance fund. Insurance funds are cash for purposes of meeting obligation arising from risks such as fire, typhoon, and so on. So these are cash. Okay. This is usually set up because the company has not taken an insurance policy. So walang manggoy insurance policy ang company, so nag-establish siya ng fund, no, for insurance. So as the entity establishes the fund, it simply must be debited to insurance fund and crediting cash. But this is for long-term purpose, no? For a long-term purpose. So non-current lang yapon siya kasi the purpose here is long-term. So cash fund for long-term purposes. So in the event of disaster or similar natural calamity, the entry to eliminate an asset that has been destroyed is required. And then the carrying amount of the asset is eliminated. So if there is a loss, the difference as a loss from typhoon or appropriate account. So the insurance fund that is used for building up a new facility is credited equal to the cost. So let's look on the illustration. A building with accumulated depreciation of 1.8, historical cost of 4,800,000, destroyed by explosion, which is currently under investigation. The owner entity of the said building has no insurance for the building except that it created its own fund with its annual contributed 240,000 for 5 years, amounting to 1,200,000. So, meron siyang insurance fund 2 million. Again, wala siya nag-establish ng mga insurance sa third party, no? So, own fund niya. Usually, ang mga company ini, ang katong gikuan sa depreciation, gibutang nila sa insurance fund. Pero, ang uban jud separate jud. Pero depende na sa how the company manage their asset and their liability. Kasi yung iba, yung part of the depreciation, they segregate it for the fund. So, this illustration is yung galing talaga sa cash nila. No? Galing sa cash, their general cash, and then they segregate it for insurance fund. Kasi they are not paying insurance premium to other third party. So after some time, the entity builds a new building using the fund. The total cost of the building amounted to 6 million. So ang kanilang insurance nga na establish 1,200,000. So the following entries are prepared. So take note, every year for 5 years, they annually contributed 240,000. So insurance fund and credit cash. And then, to record the building that has been destroyed, so yung carrying value na ay 4.8 yung cost, and then depreciation is 1.8. So 1.8, 4.8, so there is a loss on fire, 3 million. And then nag-construct ng building. So building, 6 million yung cost from your insurance fund, 1.2, so for your general cash, 4.8. Okay? Okay, next. Cash surrender value. The cash surrender value is the amount. Yung kanina, yung insurance fund nito, from your own general cash, no? Nag-separate ka. Ito naman, from a third party. You pay insurance contribution, no? To a third party. And there is cash surrender value. When you surrender your insurance, there is this cash value. Okay? Upon the cancellation of your life insurance policy. So it will only arises if there is life insurance policy. No? Like Sun Life, ano pa ba? Like Manulife, Philam Life. So those are the insurance company, and you buy premiums there, you buy a policy there, and you contribute, no, some premium. Okay? It only arises in a life insurance policy provided that premiums for 3 full years were made and the policy is surrendered. So, if you pay for 3 full years, you have your cash surrender value at the end of the third year if you will surrender it. But if hindi mo i-surrender, okay lang. So, in the viewpoint of the business, this is in connection with a company, insuring its officers and names itself as beneficiary to compensate for the loss of services from an untimely death. So, if the beneficiary is the officer insured, or anyone but not the company, there is no accounting complication. No? So, take note. So, entry natin is simply debit insurance expense, credit, cash, if the beneficiary is the officer. But, if the company is the beneficiary, okay, the following are important consideration. The insurance premium paid is accounted for in the same manner as you are taught in your basic accounting. Debit insurance expense, credit, cash. There is adjusting entry at the end of year. And there is also reversing entry. No? So take note, kailan lang tayo mag-reversing entry? If the original entry is expense method. And katong naman sa deferred revenue, if the original entry is revenue method. No? Meron siya mga reversing entry. So any amount of dividend received for by the entity in the fund is debited to cash and reduces your life insurance expense. So take note, any amount. If there is dividend na you receive, no, debit to cash and reduces your life insurance expense. Over time, cash surrender value increases due to payments made and valuation increases for the excess of payments and interest income over the cost of the insurance. The initial value of the cash surrender value at the end of the full 3 years should be recognized with a debit to cash surrender value. The corresponding credit is life insurance expense. Life insurance expense, so debit cash surrender value, credit insurance expense, equivalent to the current year insurance expense, while the prior years is retained earnings. Debit cash surrender value if you surrender it, no? Then credit insurance expense, and prior years is retained earnings. In the following year, the increase in cash surrender value should be recognized with the effect of reducing life insurance expense during the period equal to the amount of the increase in cash surrender value. So, kini siyang accounting if, take note na, kini accounting if the company is beneficiary. Okay? So, Increase in cash surrender value should be recognized with the effect of reducing life insurance expense during the period equal to the amount of the increase in cash surrender value. Upon the death of the officer, the company shall receive the cash equal to the value of the policy. It is to be noted that adjustment to record the increase in cash surrender value for the portion from previous end of the year cash surrender value until the time of death shall be taken debit cash, surrender value, credit life insurance expense. And then the gain on life insurance is the difference between the policy proceeds, the sum of the unexpired insurance, and the balance of cash surrender value. So let's look. So when you pay for the insurance premium, life insurance expense, credit cash. Unexpired portion, yung adjusting entry at the end of the year, prepaid life insurance expense, prepaid life insurance and credit life insurance expense. If you receive dividends, debit cash, life insurance expense, dividend income, na minus ang ating life insurance expense. At the end of the 3 years, na ay recognition of the cash surrender value. Cash surrender value, credit life insurance expense, and then retained earnings. Okay? So, asa kayang mga question, ang kuhanin nino, illustration? So, ibig sabihin nito, this is the premium per year. Life insurance expense, 90,000 ang premium, cash. Second year, 90,000 cash. Third year, pagka third year man good na, cash surrender value. Third year. Cash surrender value, 90,000. Life insurance expense, and then retained earnings current, previous. The difference. Then, fourth year, 90,000. And then, ano po siya, cash surrender value. Ang difference na lang. No? And so on and so forth. And then, ka-receive ka ng cash kasi namatay siguro. Equivalent to the policy. Okay, and there is gain on settlement. The cash surrender value applies to 3 years, so the current year is charged to life insurance expense while the prior years is through retained earnings. So how would you solve the gain on life insurance? Okay, face value of the policy less the cash surrender value and the expired premium. Let's look on the illustration. Tingnan natin. Mo ni siya ang katong kanina. Sige. Tingnan natin na. Gabi company insure the life president. The policy is 3 million. Okay, yearly premium 90,000. Amo ni yearly premium. Life insurance for the 3 year. Pagka 3 years, cash surrender value 90. Kaya we have cash surrender value so to 3 years 90,000. And then anong 30,000 na lang man ang i-credit. The rest is retained earnings. So let's look down. Okay. Kasi divide ng 3, okay? Kasi for 3 years, 90,000 divided by 3, 30,000 ang na-credit to life insurance while the previous is retained earnings. Nag-increase ang cash surrender value, 126, no? 126 minus 90. So, 36. Tingnan natin, dapat 36. Ayan. 36 life insurance expense. And then the next is 174. 174 minus 126. 48 ang difference. So, anong 24 man eh? June 30, manggod. Okay. 174 minus 126, 48 unta, no? The policy was collected July 31. January 1 man eh. Okay. So, divided by 2 mo to, 24. Ano siya, 24. Okay? So, namatay. Total natin si cash surrender value. We have 90 plus 36 plus 24. 150 ang cash surrender value. Matay cash, 3 million. And then, nanong life insurance, 45. Tanaw na to. Okay. Minus 126, 48 divided by 24 man to, no? 48 minus 24. 24. Where is it? Lagi dahil. Unexpired premium. Unexpired premium. Okay. Kay 90 man eh. Unexpired premium. Kasi 6 months lang. So, 90 divided by 2. So, kaya mayroon unexpired premium ito, ha? 45,000. Kasi namatay siya at the 6 months, no? June man to, June. June ba to? June. Asa to? Die June 30, 20. And then this is for 1 year. And then tanawa, January 120. Okay, so unexpired, 6 months. So 90. 90 kasi yung yearly premium. Unexpired natin, 45. Okay. So I hope klaro na siya, no? Sige lang. I will give you questions in here. And you will answer in the forum, ha? Para lang more examples.